evening, everybody. A pleasant summer evening here in Pittsburgh. Able to jump in the pool a couple times today, and looks like we're all filled up for the lake. So it'll be warm up there so we can jump in the lake. All right, we're going to kind of do a little bit of a laid-back session tonight. Mostly, due to the market, the fact that we aren't really going anywhere, which makes the number of good pretty limited. But as we go through the ones that we're already participating in, as I go through the scans, they keep popping up and still is the better chart. So even though there isn't a whole lot out there, we're already in ones that I'm sorry, I'm despondent because I'm a Pittsburgh Pirates fan, and for the last 10 games, they've had a tendency to give up big runs, like 6 or 8 runs in the first inning. And then the rest of the game, they keep fighting back. Yesterday, they were losing 6-0 in the first inning. And in the ninth, they scored 4 runs to still lose it 7-8. And tonight, they're doing better. They're playing the Chicago Cubs, and now they're losing 10-1, and it's still the bottom of the second. Just, I got to turn it off, or I hate to hear you all hear me crying, sobbing. That's about right. Yeah, they did the same thing last year, David. They climbed right up to where they were in contention going into the All-Star game, and then afterwards they've lost probably, I think, 14 out of the last 16 games. Anyways, I just relay this because I know you're all interested in my sports watching. So, anyways, as we can see, the analysis for candlesticks not only tells you when there's a good trend, but also tells you when there isn't a trend. Now, that doesn't seem to be very prophetic. That's the right word. But what it does tell us when we're analyzing the different indexes, that as long as we're in a slow, steady uptrend, you can see what the NASDAQ has done. Down, up, down, up, down. Well, the underlying factor is that the T-line continues to act as a natural support level, which tells us we're still in an uptrend. Even though it's not very powerful, or it's just kind of a drifting uptrend, what it basically should tell us, as being students of investor sentiment, that as long as the overall market investor sentiment is not showing a big dramatic change of powerful selling coming in, that just kind of tells us the market's not really going anywhere. So we can still take advantage of the charts that are showing good candlestick patterns without the underlying fear of the market really going the other way. Kareem, that's kind of splitting hairs. We're not using the 3 or the 4 or any other to be the primary indicator. We're using the T-line and the 3 to tell us what's happening in our chart patterns. So our number one criteria is not these indicators. They're just confirming indicators. What we want to be most attentive to is what is the investor sentiment doing based upon the candlestick signal or pattern. That's our first analysis. Everything else after that just becomes a confirming indicator. Okay, so overstock. We can see the pattern. Well, you should be able to see the pattern. A fry pan bottom, J-hook pattern are classic. We went after CM or CVM because we could observe the obvious. Indecisive trading right here on the 50, doji, 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 bullish confirmation. So we can make assumptions, and our assumption is this up in this area is probably our first target. Well, from here to here, that's probably a very reasonable rate of return. I want to say 6.5 to 8 5/8, so 2 points, about a 30% upside potential. So that's what we're looking for. Now, if this was a 3% upside potential, we'll probably sit here and say, yeah, so your upside target should be worthwhile. Kareem, yes, Rick was one of my first private training students, and so yeah, if you're trading on a short-term basis, yeah, you're probably looking at the candlestick charts to see what's happening. My swing trading is 2 to 10 trading days, and so Rick does more of a scalping type trading. So, but he's using candlesticks as the underlying. Yeah, there's another thing. Put the 3 and the 4 on your chart and see if there's any real dramatic difference. Let's see. Do you recommend sitting out a session like CMV had today if you don't get in at the open? Not necessarily. If you see that it's confirming, let me make this bigger, and you say, all right, I didn't get in at the open of 732. Do I buy it at 750? Do I buy it at 760 or 758 or whatever? The answer is it confirming the signal? And are we way out of line just yet? And the answer is no. We're seeing a confirmation of the buy signal. And what's still our upside potential, even if we didn't buy it at 732, or if we bought it at 748 or 761? What's our upside potential on a confirming signal? Still up here, still another 25, 30% upside. You can just realize that now you're one further step away. But if this is your analysis, or should be your analysis, here's your first target. Would be short options trade. You can do that if the volume is big enough. I forget what the volume is. So anyways. Now, so here's the other learning process. Is if I see this, do I buy here or do I remember? If I see something like this, I get ready. Kareem, yes, something's wrong if you're not making money. We've been teaching hundreds, if not thousands, of people that they come back and say, I finally see the light. You also put resistance at $8 level. Not really. Why? What is there on this chart that tells you they would stop buying at that level? What scan should I use on TC2000 to be finding the same buys? Gary, if we need to, this is probably going to be relatively short today because there's not a whole lot going on out there. Maybe, oh, okay. Oh, yeah, that's the, who am I looking at? John, let me see if we have time to do some quick scanning techniques. Well, Kareem, I don't know what to tell you. Apparently, you're not running the scans correctly. Yes. And so, all right, I can see we're off track here. There's a couple things that kind of diminish your possibility of making good returns. One, if you're ready to buy a position, and again, I use my technique of a set number of positions in the portfolio, but let's say I woke up this morning and I said, I've sold 2 positions last night, I need to buy 2 positions today. Well, in the case of Brad's question, is it still a buy on positive trading? Probably. But I know, well, we should all know that if we see a buy signal and it opens positive the next day, what's our prospects? That it's probably trading positive after a buy signal. So I'm not squeamish about going in and buying on the open. We did kind of the same thing. People were asking the same thing a while back on this one. We're at a left-right combo, gap up. People were saying, I hate chasing after something, but we're not chasing after it if we know exactly what's happening. First of all, after a left-right combo, and then a gap up through a resistance level, giving us a bobble breakout, we're buying here. Now, a lot of people say, oh, shoot, when I buy, what happens when I buy and it immediately goes back down again? There's 2 elements to that. I'm going to get way off track here. I guess this is probably why we're here, is to get a good learning process. We're ready to buy on positive trading on this pattern. All right, we're ready to buy. So what do we want to see as soon as it opens? We want to see that they're still buying. If it opens up and after 30 seconds or 45 seconds they start trading it off, what's that tell us is happening at that point? They're not buying. I mean, that's just simple logic, that if it opens positive and you're expecting buying and they start showing a red candle, we can see visually that this is not a time to be buying. When is it time to be buying? Well, if we watch it come down here and then it turns around and comes back up through the open, what's that telling us? They are buying after the consolidation. Oh, I was trying to think of something else. If you're looking at the last one, yes. Remember that a spinning top and a doji represent the same thing, indecision between the bulls and the bears. Now on this chart versus some of the other charts, the body of this one is a little bit bigger. The other ones were smaller. All right, so now, Jay, That's why I'm going up backwards here. Jay's saying I have trouble staying with the plays and take them off too soon. That's where the T-line has become a very effective tool for me. That if I see something that tells me I'm long, I just use the T-line. Because we already know, and you've probably heard me say it time after time in the chat rooms, you just stay long as it stays above the T-line. Because the probabilities go dramatically against us if we see a sell signal and a close below the T-line. Again, so now the other thing that should always be in your mind, which took me quite a while to really get established in my own trading thought process, is there was an old saying in futures trading that if you could make money on one half of your positions, you'll make a fortune. When I go through candlestick charts or candlestick positioning, and again, this is unofficial, this is just from approximately 30 to 40 years of trading, I would estimate that 2/3, 67, 70% of my trades are going to be positive. Now I know out of those, some of them are only going to be 0.3% positive. Some are going to be 300% positive. But I know that every time I put on a trade, the probabilities will be that it's going to be a positive trade for me. But that also left a whole other side of that equation, that approximately 1/3 of my trades aren't going to work. Now, before that got established in my head, it just kind of tweaked me out that I put on a trade and, man, it didn't work. It's supposed to work. I'm going to hang on to it and see if it works because I evaluated that it should work. When I finally realized that that trade isn't working, now I've got impetus, I think is the right word, to close that trade out quickly and go find another trade that has a 70% probability of working. That way I've kept my emotions out of my trades, and I can pretty well, without emotional input, close out a losing trade very quickly and move that money on to something that has better probabilities. You can use the 21 EMA. This is another element. See how simple these charts are? Let's say Joel thinks or puts the 21 EMA on here. Do it. It's not going to clutter up your chart. But after 2 weeks or 2 months or whatever, you say, I really haven't seen anything attractive or any support or resistance at the 21, take it off. Or if somebody says, put the Bollinger Bands on also. Well, if you learn how to use the Bollinger Bands and they work better, keep them there. If it doesn't work for you, take it back off. The more simple I keep my chart, the more my emphasis is on the signal and not all the other indicators. That's right. Not every, RM was kind of stating that not every trade that looks like it's setting up or should be confirming will confirm. So as long as I've got that now established, I don't have to sit here and think, oh man, why did the trade that I thought was going to work not really go anywhere? Because some of them don't. Brad, that's where if you're using the indicators and you know that the bid-ask as well as the price movement leverage of a option, you've got to go to a much more refined type analysis. So if I see something that looks like a sell signal, and I'm up close to the overbought area, and I've got the potential of coming back to the T-line, I've got to figure, all right, if it comes back to the T-line, how much time does that eat up for me? So if I closed here, it took 1, 2, 3, basically 4 days of my time aspect to decide to get back in it. So you've got to be a lot more nimble or a lot more analytical to say, all right, I'm seeing sell signals. If they start confirming, if they don't confirm that the uptrend's still up, yeah, better come out of that trade much more quickly. Okay, so, all right, I'm going to keep doing this, but keep asking questions. I think you can use delta as a good approximation that you'll make 1 cent or more. See, Jeremiah, I don't even think about deltas because I have a good inkling that whatever developed in the deltas right here has absolutely nothing to do with the candlestick breakout pattern. So if I'm buying calls right here, delta has absolutely nothing with my evaluation of what the next phase will be. That's right. Again, the bid-ask spread is a kind of a function of telling you how much volume is trading in that option. AZUL, your best friend gap up scoop type pattern. That's the first thing as I look at to see what the strength of my my trade or my trend is going to be from here. Because if you look at things based upon the signal, look at what happened here at this best friend signal. Doji gap up, bobble breakout. This is our expectation. Brad, yes, that's likely the case. So if I'm trading an option account, where if I'm trading a stock account, and again, these are parameters that you can set up for yourself. Let's say I've got a $200,000 stock trading account, so I know that each one of my positions is going to be $20,000. All right, maybe my minimum is 200,000 shares a day. If I've got a $1.2 million account, and I know that each one of my positions is going to be $120,000, I might move my scanning search up to 700,000 shares a day or 1 million shares a day, which does the same thing for me that if I'm going to be trading options, and we know that option volume is probably a direct function of the volume in the stock. So if there's a good trading stock and it only trades, it's a $70 stock trading 640,000 shares a day, that's not bad if I'm going to buy the stock. But if I look at the options and I see that what did I just say, trading at $77, if I can see the 80s are trading, bidding 2 and asking 260, well, that's a pretty wide spread. I'm going to have to finagle that one. I'm going to have to put my bid in somewhere in between and see how long it takes to execute it. Now, on the other hand, if that stock is trading 6.4 million shares a day, I'm probably now seeing the 80s trading, bidding 2, maybe asking 210. So I know that I don't have to worry about the spread as much. No, Kenneth. If I'm trading an options account, because it's got more leverage, and usually I'm trading a combination of both. So let's say I've got a $200,000 account, 10 equal positions. I might have 9 stock positions on, and I've got a $20,000 option trading unit. Well, that option trading unit might be 4 positions of maybe $5,000 a piece. Now that means I've got approximately 14 stocks that I'm trading, or I've got maybe one of those positions where I bought the stock and the calls or a call spread to go with it. So I'm using 10 as something that I can easily track and maintain my discipline to keep each unit as an equal dollar amount. But if I do 14 positions based upon, we can probably analyze the 10 stock positions in less than 45 seconds each afternoon. And then I can go look at give a little bit more analysis to the option positions. But no, I wouldn't have 10 stock positions on in one account and 10 option positions in another account. If I've got 4 option positions on at any one time, that's usually my limit. Yes, so you can do that. TW there's a lot of times where the weekly options may not have nearly the volume as the monthly options. That's true too, RM. Remember, the whole point of doing all this analysis is to make money. And if you look at an option trade and you can't figure out how to make money, or buying the calls or even buying the spread is too expensive, you don't have to take that trade. That's the reason I tell people, learn how to do your own scanning, not just listening to what picks we put out. Because every time I put out 3 picks, that's usually coming from a list of maybe 7 or 8 that could also be recommended. I just happen to pick the 3 that look the best, but the next morning, 2 of them are opening lower. I can go look at the other 5 on that list and see if any of those are working. But that's why you want to be able to do your scans, and we'll, when I get back from the lake, we'll do a scanning session. You know they are really bad for options when vertical spreads don't work. Yes. Now, there was times, and I hate to get further off track, there was times when options first came out, and you could buy, I'm just picking out figures, you could buy a Apple 120 for $9.40, or you could buy an Apple 130 for $9.20. And so back then, if you decided to do a spread for 20 cents difference, and if it went to 130, your 20 cents went to $10, that's because the liquidity or the knowledge of how to trade options back then was so out of whack. But that's still, that same process is still viable in today's trading when you can see the price of the spread makes sense for the amount of price movement based upon the candlestick chart and the risk factor at that point. And we're going to be doing a full day options strategy session soon to get back up from the lake too. Okay, so where am I? I'm on chart number 4, and we only got 50 more to go. All right. So, whoops. So here's what we want to be able to analyze. Has there been a new new dynamic in this stock, Twitter. Well, our first analysis, fry pan bottom. Second analysis, what got this fry pan bottom to break out? A trend kicker signal. What's it doing today? It really didn't confirm today. So now what do we look for? With stochastics coming back up, a fry pan bottom kicker gap up breakout through resistance level. If it opens positive, what we got going on? Essentially a doji sandwich. So we didn't really execute today because, first of all, the market looked lethargic, and there wasn't. By the time they moved it up and started bringing it back down, you didn't want to go after it because they were selling it off at that point. But if they open this positive tomorrow, that if they open this positive and we got a doji sandwich, I think when I recommended this strategy in the options room, looking at the August 9s, meaning 2 weeks from now, August 9th weeklies, you could buy, I'm pretty sure it was the 42 and sell the 45 for 64 cents. Well, if this pops up over the next 2 weeks to 45 or above, that means your 64 cents went to $3. That seems like a good risk-reward session or a return. Yes. You're always going to be able to, RM, you're always going to be able to find a good short trade when the market's going up. You're always going to find a good long trade when the market's going down. But why go against the odds or the probabilities? If I'm putting out positions or putting positions in my portfolio and I can see the market's in a good steady uptrend, I might be 8 positions long and maybe 2 positions short. Maybe even as high as 9 to 1. And when it starts rolling over, I start converting it to where I'm selling off a couple longs, adding a couple of shorts. And by the time the market rolls over, I might be 6 short, 4 long, because those 4 longs haven't shown sell signals yet. So just kind of common sense is you're going to make your bigger money when you're going with the flow or going with the market trend. So anyways, because we can analyze the pattern and the signal that is breaking that pattern out, that's what we're trying to identify, is the pattern itself and then what's going to make a strong move to the upside. Let's see. I'll come back to a few of those. I'm going to go through some of the ones that we already own. Yeti. You can see the bobble breakout. You can see the J-hook pattern. You can see the next J-hook pattern setting up. So what's your criteria if you're long on this? Just don't let it close below the T-line. Oh, don't even know what the Twitter target is. All we know is when they break out, it's going to be a long, or should be a good strong uptrend. So if we don't know what the target is, what becomes our analysis? We're waiting to see when we see a confirmed sell signal. Yeah, I think on Twitter I kind of estimated 50 because that was where the initial trend was moving to. No. Who is asking? Kareem, I'm buying the signal. The other indicators are just confirming indicators. Now, remember our criteria. The further away you move from the T-line and you see a buy signal, the higher the probability it's going to come up and test the T-line. The further away you move from the T-line, the higher the probability it's going to come back and test it. So the number one criteria is always the reversal signal. Same criteria, Ahmed. But if I'm trading on it, if this was my 10-minute chart, same criteria. If I'm moving too far away from the 10-minute T-line, look for some profit taking, especially if your stochastics are up here. But it is the same criteria. If I'm hugging the T-line, let me see if I can find something. If I'm hugging the T-line, if it closes below the T-line, I close out the position. Look what happened right in here. You can see they were trading below the T-line, but they couldn't close it below the T-line. There are, I'm going to show you a few of when you should close or present your stop below the T-line. And that's probably based upon witnessing a reversal signal. Okay, I'm going to keep chugging here. I'm going to answer all the questions. We might not do individual stocks as much tonight, but we'll try to get through all the questions. Do you use a 5-minute, 10-minute, 15 chart as a day trader? Yes, but I might be more apt to use a 1-minute, 5-minute, 10-minute chart, depending on how fast you want to trade. If you might be trading the dollar on a daily basis, and you're probably going to make 2 trades during the day, maybe you're using the 5-minute, 15-minute, hourly chart. So you pick out the charts that fit the trading style that you want to be doing. Okay, there you go, Dave. Okay, you got the mouse pad. All right, good. Everybody should have a mouse pad. So we can see exactly what's happening here. Here's another case. Now, there's a bearish engulfing signal. It gaps down and trades lower. Yeah, I might have closed that out. But then what can we recognize by the end of the day? They've brought it back up. And in a couple of days, if they bring it back up through the T-line, what type of patterns can I estimate is occurring? Probably a J-hook pattern. So if I close it out here, I have no qualms about buying it back here, because at this point, where was it going? We have no idea. They could be bringing it all the way back down here. When it got to this point, what was it telling us? They're back up above the T-line. I can start recognizing the next potential pattern, a J-hook pattern. Now, I am more apt to close it out when you're up here in the overbought area. On the other hand, I don't see anything. But if I was down here and the stochastics just came up and this traded up and then traded down here, I'd be more apt to wait to the end of the day to see if it was going to come back up. Yes. Now, as TW was saying, that the moving averages act like magnets. And the reason for that is most decision making is done at the moving averages. So if this started selling off and kept selling off and you were a buyer, where do you think you were going to wait to see if it's supported? You weren't going to buy until it got back down to a support level. Oh, PAS. Another one that just has, look at our bobble breakout, fry pan bottom, doji sandwich. The more we can put into our analysis that we're probably in the right trade at the right time, the higher the probability that we're in the right direction. And we're going to do a night where we just do common sense stops. If you're in an uptrend and you're moving that far away from the T-line, where's the best place to put a stop, or at least a safety stop? It shouldn't come back through the open of that candle. If it does, where do you think it's heading to? Right back to the T-line. I would rather close out and then buy back later and give up my potential profitability than give up my profits. Let's see. Let me get through this. We'll go back and analyze what our first step is each day to see which direction we think the market is going. BC, when we started buying right here, what did that indicate? More than likely, they were coming up here to the 200-day moving average. What was our criteria today? If this had closed lower, what was it telling us about the 200? It was acting as a resistance level. What type of pattern can we probably be anticipating? Maybe a bobble pattern. However, today it traded positive. Now, if I didn't sell out yesterday and I held today, where would be yes, kind of a bobble breakout possibility. But remember, a bobble usually comes back, but in this case it came back to the 3T line. If this showing me that they're trying to get up through the 200 a second time, where would be a good logical place to put a safety stop? At today's open. Because if it opened and came back down through there, what would it tell us about the 200? Pretty much telling us that's where the sellers were taking control. So again, every time I look at a chart, it's not because I've got any great insights as to what's happening. I just know that based upon candlestick charts, there's places that tell us where the bulls are in control and where the bears are taking control. The reason we recommended PCRX was, look at this. To us, or to a lot of people, what's that tell us? Oh, there's a lot of resistance right here with nothing. What's this tell us? There's our hammer, doji, hammer, gap up. Anytime we see a signal and a gap up, especially coming out of the oversold area, what's that implying? That's implying everything that we should be learning in candlestick analysis. As the Japanese rice traders told us, if there's a buy signal, especially in the oversold area, more than likely you've got an uptrend. If we've got an uptrend and we can recognize our scoop handle, what are we anticipating from here? That continued slingshot effect to the upside. So why do we recognize a scoop pattern? Because a scoop pattern works time and again to tell us what's happening in investor sentiment. Here's another one that did break out. Now this one told us when they close back here, what should happen after a breakout? It should be trading positive. What happens when we see a big sell signal? It's not trading positive. Close out the position. You get rid of the chart? Yeah. This starts trading positive again, telling us that they couldn't get back down below the 200 and they're back up above the T line. You start going after it again. All right, so if you, I'm going to just pick out hypothetically, if you bought here and you sold here and then you bought here, if it goes up here, those little buys and sells mean nothing. All that was the cost of doing business to make sure you were positioned in the right trade when the trade started working. Okay, I can go through some of these real quick. Light. You can see, again, our Doji best friend gap up. What's our criteria on this one? We just stay long as it stays above the T line. Polar. I don't know what it is. There's our Morningstar signal, followed by a Doji sandwich. What's that called? Anybody? Oh, there you go, Jay. All right, good. A McMuffin. And what do we assume from a McMuffin? First of all, we assume that if you see a Morningstar signal, one of the 12 major signals, you got an uptrend. If you see a Doji sandwich, what do we assume from a Doji sandwich? You got more upside. So if you got them combined, that's pretty good evidence there's going to be a lot of strong buying. Do you want to see a pullback after a breakout? Definitely not. JJ, if we see a breakout, what do we want to see? Obviously, when we want to see bullish confirmation, telling us the bulls have taken control. What does waiting for a pullback imply about your investment acumen? That's my big word. It implies that when you see a good trade and you didn't get in it right away, that you're going to wait for it to come back so that you can get in it. Now think of the ramifications of that. If you're buying something that tells you the bulls are in control and you can wait for the bears to knock it back down to where you can buy it, are the bulls really in control? No, you're buying something that you're hoping the bulls are in control, number one. Number two, what does your immaculate execution philosophy tell you, or that you think is happening? That when it pulls back, as soon as I buy it, I'm smart, and as soon as I buy it, it's going to go right back up again. That's a lot of wishful thinking. When in an option, yes. Well, Brad, I tell people that if you learn from your mistakes, I'm one of the smartest traders you're ever going to come across. Not only have I made every single mistake, but some of them I've made 7, 8, 9 times just to make sure I had that mistake down pat. Crocs. See a failure up here, and then it pulls back. Hasn't closed below the T-line. So what are we looking for? But if it stays above the T-line, we got the possibility of a bobble. Now, look at our little breakout right here. Where do you think our next target was? The 200. Pulling back, what do we need to see? It needs to stay above the T-line. If you missed this, what's our next prospect? Well, if it comes back up here and breaks through the 200, we know we got a bobble breakout. We've got high probability of more upside. So we don't necessarily have had to have hit this one or hit this one. We're getting ready for the next high probability trade. Okay, what else do we got here? Nugget. Okay, we're going to get... No, let's go to the reason you close out positions. Bullish engulfing gap up. Off the 200. Starts trading positive. We're in a good trade. And a bearish engulfing signal to close below the T-line. There's one thing that you should come away with as far as the T-line. It's a natural support and resistance level. And as soon as it closes below the T-line, the probabilities have gone against you dramatically that you're in an uptrend. I have made so much money by closing out the position and then buying back if it comes back up. Because I've made so much money by not holding on to something like this that went this way. I think Netflix was a good illustration. Nice J-hook, uptrend, indecisive, close below the T-line. Now, in the old days, I'm thinking, oh man, this is such a strong uptrend. Let's see what it does tomorrow. Now, if it had closed just at the T-line or just slightly below, that would tell me they came back. Let's see what it does. When they close decisively below the T-line, after sell signals in the overbought area, what should we be saying about our probabilities? Well, if we know candlestick signals, we're pretty much assured that the probabilities have now gone against us. We should be out of that position. Momo, yes, I would have still closed it out. Your stochastics have rolled over. You've got a bearish engulfing. And here's one of those little, I keep telling people you don't have to be a sophisticated technical analyst to see what's going on. But there's some simple truisms about technical analysis. If you see an uptrend and a pullback, and then the next uptrend doesn't go back up here, you start seeing sell signals, that means they've given up. They aren't going higher. They're probably selling off. Yes, if you just kind of tell yourself that when I put on this trade, I've got a 33% probability it's not going to work, so just be ready to, on any trade. If it's not working, close it, because if it's not working, all you can then be doing is sitting there hoping that it's going to turn around and work. The whole reason you bought the trade in the first place was based upon the analysis of the signals and patterns that you were witnessing and that they should be confirming. Would you short Netflix? Well, I didn't, but it was probably a good, if it closed below the T-line, where do you think the next likely target was going to be? Here at the 50. And if it was still trading down on earnings day, what did you think was probably happening? It wasn't going to be a good earnings. So just visually, what were the probabilities when you saw sell signals and close below the T-line? Probabilities are in your favor as long as you didn't see a buy signal and a close back up above the T-line. And or you started seeing buying when you were in the oversold area and you were a good fur piece away from the T-line. That's true too, yeah. Okay, so here's another one. We made good money on this trade until right here we had to close it back out. Because what's our rule about a 45 degree? You stay long until you see a sell signal and a close back below the T-line. Stay. How long do you stay in stay? You see a sell signal and a close below the T-line. When it closed below the T-line, even though it's still right there, what's our probabilities? It's not a strong uptrend. Take your money, take your profit. I would rather get the fat part in here versus trying to get out at the very top. Just close it and go find another one that looks like this. The more positive trades, or the higher you can create your positive trade ratio, the bigger your compounding effect's going to be. I have so many people say, well, man, I gave back some of my profits before I could get out. Yeah, but I'd rather take that big fat part and then get out when it's telling me it's confirmation time to get out. I think I saw that too. Let me take a quick gander here to see. How can I miss? I don't know where they are right now. They're not showing quotes. All right. But the fact that they closed below the T-line, the probabilities immediately went against you. $6.90, yes. It was trading down here. So whenever you see the close below the T-line, now are there going to be times when you close out the trade and then 2 days later it skyrockets on you? Certainly is. And I can attest to that. It's happened to me not many times, but let's put it this way. For every time something has closed below the T line and I closed it out, I would say 90% of the time I was happy I did it. Tim, that's another ramification too, is holding things through the T line or through the earnings. And I will try to hit those charts that are illustrating that. So here we have Nugget. Now Nugget may not be tradable, but what's the Nugget chart telling you? That more than likely the gold stocks are still holding up fairly well, or starting to come back. What was the other one? Oh, pause. We did that one. They're still trading up. And so, Brad, there is and we'll get into this when we do the options weekend. There is a way to participate in the big price move in the stock, even though you don't know which way it's going, with simple strategies, and we'll do that. Kirkland, if you closed here, you get ready to buy back, because what can you see going on? A good steady uptrend, making it appear somewhere your next likely target. So here's, again, observe the obvious. Tesla. What type of signal do we have here? There's our Morningstar signal. Where did it bottom out? Right smack dab on the 50. Now, you don't have to be great eyesight to see where they actually bottomed this out. So where do you think the next bounce is going to move to? Probably at least coming back up to test the T-line. So anytime you see something that's coming up to test the T-line, that means you want to see what type of signal occurs at that level. Netflix, when it bounced back up, if it did a little doji here, that would have told us, all right, we get ready to close it out if it opens lower. If it did a little shooting star, we can see the nature of the buying or selling at levels that that are relevant. And again, here's another situation. This is one I was looking for. If I see they're selling off and they're right at the T-line and they're announcing earnings the next day or that night or right after the close, I'm closing out at least half the position, if not the full position. Is Newmont a hammer? No. Hammer, no. Oh, right here, no. What's the definition of a hammer signal, Bert? Don't anybody help him. Don't help him. The tail should be 2 times greater than the body. Yes. Remember, there's only one formula that you have to know in candlestick analysis, and that's the number 2. Is it a bullish Harami? It could be. But notice again, you still haven't gotten to the oversold area, so you still watch it with a little skepticism. Now, if it does start trading positive, and you see this starting to curl up a little bit more, yeah, where do you think your first bounce is going to be? At least back up to the T-line. So if you were short, you saw the bullish Harami, and then it opened positive tomorrow, I can do this. This is gold. Massive gold isn't really going anywhere. There's all sorts of trading strategies you can use, option trading strategies if you don't know which direction a price might move in a big way. And that's where TW, yes, that's where some very easy spread setups become much more viable. Oh, there's another one. This is, we were making good money with the options. We rolled out of the Julys and moved a smaller position over in the August. Now, why did I move a smaller position? Because look where we were. We were in the overbought area, and we're now just anticipating that it's going to move higher. But remember our awareness of what is going on in investor sentiment. They announced earnings. They weren't great, but they weren't terrible. But the next day, they opened down here, well below the previous day's open, and traded positive. That gave a little bit of hope. But this comes back to the simple, logical assumption or evaluation of where should this not trade if things are still good. Shouldn't trade back below the open of that candle, because logic says if they open it, go down through there, were the bulls convincing? No. Now, I've got this over on my short list because it did a doji today. Stochastic's heading down. Yes. And so, remember, earnings or anything else is probably not going to affect the fundamentals that much, but remember what moves stock prices: investor sentiment, psychology. So if your earnings came out and said, yeah, they weren't as good, but they said, but we're going to be, because of such and such, we're going to be much stronger the next quarter, they're going to be buying. Or if they come out and say, yeah, our earnings weren't quite as good and it looks like we're going to have another bad quarter coming up, yeah, investor sentiment's now being decimated, and so if their movement, remember the movement was closed here, opened here, and couldn't or almost got back up to the open, but that still was not strong. It still told us we were above the T line, but we had a gap down. We still should be alert to the fact that there might be sellers. Okay, let's see. Let me get on to, have I done Apple? Apple's not a very exciting chart. However, look at the one criteria that's happening in Apple. Just a slow, steady eddy. Now, there's very few times where you can say Apple's in a steady eddy because it's usually oscillating pretty well. But right now, it's a steady eddy. Would I trade it? Probably not. But what underlying piece of information does it give us? It's telling us investor sentiment really isn't moving out of this market. There's, does Apple have earnings tomorrow? But it's kind of telling us right now there isn't any, but there isn't any negative, sentiment in something that everybody's always watching. Now, Amazon, for example, Barry Shirami, so when it closed below this level, and what that tells us about our uptrend? We should be out of this. When did we want to get back in? When we had a convincing buy signal. Left-right combo, pretty strong, except the next day they didn't confirm it. They closed it back below the T-line. Probably wouldn't have had enough sense or enough information to go short, but when it gapped down and did a doji, what did it tell us if it opened lower today? Bearish doji sandwich. Where do you think the likely target was? The 50-day moving average. So this is all stuff that you can kind of add two and two together. Why wouldn't you look at XL and X and say, woo, woo, possible doji, bearish sandwich? I think that's what we just did. Yes, if it opens lower, Did I skip on without saying that? If it opens lower, what do we got going on? A bearish doji sandwich. And if this candle right here is the same magnitude as this candle right here, what do you think your observable target is? Right down here to the 50. Yes, there should be, easy scans for that type of setup for the first half of a doji sandwich. So we've got some that fortunately fit into the steady Eddie pattern, OLED, ever since the left-right combo. And why was that relevant at the T-line? Because look what else it did at the T-line, a bullish Harami. How long do you hold on to this one? Until you see a sell signal to close below the T-line. Where do you have your safety stop? Just below the T-line. NVIDIA, another one. What do we got going on here? The T-line crunch. That could have been our sell if it had opened lower the next day. To stay in it, what did it need to do? Needed to open positive and trade positive. Now what do we got? There's your hanging man in the overbought area. Traded open lower. If you were trading it, what should you have been doing immediately? Closing it, because where do you think your first target was going to be? Right here. Can you get back in? It looks like it's doing a J-hook pattern. Yes, you get back in. What did we do Netflix? We did Netflix, which makes Western Digital. The next one. Did it close below the T-line? Not yet. Micron. Did it close below the T-line? Not yet. And if you're playing with fire, where is your signal? A gap up doji in the overbought condition. And they open it lower the next day and start trading it down. Where do you think the target is? At least back to the T-line. Micron got hit after hours? All right. Yes. I think they said this was up 800% from the offering. Now, they came out with earnings that were negative 24 cents when they were expecting them to be negative 8 cents. Now, last I saw, it was trading down in this range. Yes, so remember when things start getting exuberant. Look what happened when it broke out kind of from this range. That was a good buy. That was confirmation. Good buy. Now, they gap it up in the overbought area, gap it up in the overbought area, moving a good distance away from the T-line. If I saw this, and you had been buying down here, and I'm going more on the option basis, I saw this that far away from the T-line, that becomes our first alert that if you had any options, which I guess they do have options, start taking some off the table. Then if they open it lower the next day and start trading lower, what's that telling us? That's telling us they're confirming that doji up there, close out the position. Is this a good place to be long? Definitely not. You're in the overbought area. You've been gapping up. You had a doji. You moved that far away from the T-line. Everything that we kind of indicate or illustrate that is occurring in investor sentiment is happening. You're too far away. How do you close the option? Do you link it to the stock price? No. An option is just a piece of paper. But if you bought options down here, you're buying a piece of paper that says I can buy this stock. Well, you can sell that piece of paper up here, just like anything else. Trading at 191, right about there. So if it opens here, what do you think's happened to this trend? Pretty much going to be destroyed for a while. Oh, and they're coming out with a new stock offering. That'll kill it for a while also. Okay. Disney. We've been looking at Disney for an option trade because of this chart pattern. Dang, Jiminy Christmas, I can't hit a little square for crying out loud. Makes you want to hit your grandmother. So you had a move like this, and you had a potential fry pan bottom type setup. Came up through. I think it came up through, is that a kicker type signal? No, just a piercing signal gap up. What should it have been doing? Breaking out. When it closed back below the T line, what do we know? The probabilities just went against it. Doji, bullish confirmation, that's when you can be buying. Now, at this point, I don't know whether it's here. It was another resistance level. Maybe it was here. But it broke out through that level. There's got too many lines on here. All right, now we might be back in the breakout mode. Again, knowing that the bullish sentiment is coming from the fact that I guess Lion King is doing great guns. Deer. What can we see? Wave 1, wave 2, and they've basically broken out into wave 3. Now, would I be buying it today? No. Would I be buying it tomorrow if it opens positive and tells me I've got a doji sandwich? What do we got going on? A good breakout with the possible magnitude move of this. CDMO, slow curve, right now breaking out. Wave 1, wave 2, wave 3. The reason we want to recognize the patterns, oh man, it's 9:15, that's kept you way over time, is because the patterns have very recognizable results and with high probabilities. MGA, J-hook type pattern. Where did the failure occur? A left-right combo right there at the 200. Where's the bobble set up? In this case, not the T-line as much as the Morningstar signal at the 50. When it went through here the second time, what do we got going on? A J-hook bobble pattern telling us there's probably a lot more upside. Let's see, MAKR. Another bobble, not bobble, but J-hook pattern breakout. And what makes this relevant? Look what's happened right here at the T-line. If you're long, you can just stay long. If you're thinking of going long, wait for it to break out through this level. Another J-hook pattern leg to the upside. Right now, because of all the auto parts stocks, you can see them setting up. Can you show a clean chart versus a confusing chart, which should be avoided? Yes. But I can't think of any right now. Now that would have been a confusing chart, but what was the underlying factor? The fry pan bottom breakout. What do you think's happening here? You stay long until you see a sell signal. MRC. This is where taking profits and or going short becomes easy to recognize. Where do most people buy? They buy exuberantly at the top. Very simple. If you see a gap up in the overbought area and they trade it positive, your safety stop goes right here where it opens. Because logic says if they gap up in the overbought area and start selling off, that's where the profit taking is going to occur. If they opened here and immediately started selling off, put your safety stop at yesterday's close, because logic says if they come down through there, you're going to have some sort of sell signal. Facebook. This is another part of some of our trainings that says, all right, getting a little bit toppy, doji, bearish left-right combo, close below the T-line, get ready to go short if it opens lower. Didn't open lower. Now what happened to Facebook? Dark cloud. At any relevant spot? Yeah, right about where it topped out before. And now what do we got? A bearish doji sandwich with a dark cloud, a double top. Where do you think the next likely target's going to be? Here. Where's your next likely target? Fill in that gap. Or coming down and filling that gap. Oh boy, I guess I got all of them. Did I do PI? PI. Same scenario. They were going into earnings tonight. You saw a shooting star and a close, but it didn't close below the T-line. However, what were they telling you going into the close when they're just about ready to announce the earnings? They're confirming a sell signal. Is this a good high probability trade to stay long? Definitely not. You're in the overbought area, shooting star, trading lower. Everything's showing sell, especially going into earnings, except for the fact that it didn't close below the T-line. Remember, this is more important than the T-line. That's true, too. Okay. Any questions that we kind of left over? FPH. That's not coming up. Is there another? Oh, if it's over on the. Well, it looks like it's trying to work. It might not come up here. Sorry. Well, PI was not a good sign. It's, yes, kind of an evening star signal in the overbought area, especially after a shooting star and selling off. But even though this didn't confirm by closing below the T-line, what were they telling us as they were going into the earnings this evening? They were selling going into the earnings. That would have told me I better get out. Because at that point, what does that chart look like? Is it bullish? Not necessarily. And they've got earnings? I'm just hoping at this point they go higher, which is not a good strategy. BSH? Yes. Now that one I would have probably given more prospect of it. They're buying going into the earnings. So I'd be less apprehensive about holding on to it. If you're going to make a trade, if you were going to buy, what were we just looking at? I forgot. How can I not remember? Oh, PI. If you were thinking about going short, you'd want confirmation. If you were long and you were deciding whether to hold your position and you see a sell signal going into earnings, yeah, you close out the position. Okay, let's do this. If there's no more general questions, Jim, go ahead and do the double line, but everybody just do one pick. How's that? Neil, 2 picks 3 times. Lows, you can see inverted hammer, inverted hammer, inverted hammer, dojis, bullish confirmation. Yeah, suspected J-hook pattern. Home Depot, look at kind of your bullish flutter kicker, wave 3 in progress. IBM, nothing wildly exciting, and I don't know how relevant it is today. It used to be that if IBM was trading higher, the whole market was going to stabilize. Oh, hogs, okay, not Harley. Well. August, look at your bearish engulfing. Doji gap down, I would suspect at least coming back. Remember, when they go through a resistance level, they usually come back and test it to see if it's going to act as support. So I think it's probably going to head back to test the 50 on the hogs. Paul, which one is that? How to play? If you're looking to play, Dave and Buster's, nothing. Oh, somebody was saying, can you see one that's confusing? Yeah, Dave and Buster's. What's that telling you about the buying and selling? Just nothing there. So if I can look at this chart and say, well, there might be buying, but we don't have any trend. Let me go someplace else. And Twillo, another one where this is why I tell people and try to stress, only because I've screwed up so many times myself. Whoops. Why can't I? If I see something, obviously right up until this point, it looked like an uptrend. I'm ready to break out. But I'm getting up toward the overbought area. I better just have a safety stop just below the T line, just in case, or at the previous day's open. Because if it came back down through there when we're at a resistance level, what should it be doing at the resistance level? It should be breaking out. So the fact that it went this way, what did that tell you about this resistance level? It's still acting as resistance. Just kind of observe the obvious. The signal is the confirmation, yes. Kind of a bobble breakout on AMC. You stay long on this one. I'd have my safety stop just below the T line, just in case. We did Lowe's, we did Twillo, CVS. Little bullish engulfing, left-right combo. You can be buying this one. It's not going to be a real prolific price mover. As you can see, this is not a great looking chart. So JJ, unless there's something really spectacular happening, I'd be trying to find something that has more of a trend to it. Philip Morris. There's a J-hook pattern in progress. This one I'd be more apt to try to figure out whether my classic pattern, I'd be a buyer, and then you just watch to see what happens when it comes up to that level. And Bosch, the gap up is your alert on this one. Now you can see, let's see, There's got to be way. Move that. Way out of the hole. People hit it so often. But, whoops. So what type of trend does this have? That's ugly. So if you're buying this, you've got to make two very quick assumptions. One, that it's got to break out through this level. Two, if it kind of sells here, you're still stuck. So you got to, if you're buying this one, it's on the basis that you need to see something new happen at that level. And VC, well, what's going on here? Gee. Okay, let's try this. VC, we're waiting to, now this is very simple. If it doesn't open positive, if it opens lower and starts trading lower, they've failed here at the 200. You close it out. Alaska, oh no, Archimedes, that's nothing. So when you look at this chart, somebody was asking, if you see a junky chart, what do you do? What do you do here? I have no idea. I'd be out of this trade and moving on to something that I can analyze. AES, there's something you can at least hang your hat on. Where is this trend going? It's an upward trend. It bottomed out, left-right combo. Where do you think your next target is? Up here. So at least you have more of a trend analysis on that one. And Disney, we will probably, if I can muster up enough strength, I'll probably have some Disney strategies. That's all right. You have a cat, you can blame it on the cat hitting the Home Depot, uptrend. TSEM, that's a toughie, but what's your underlying pattern? There's your fry pan bottom, there's your breakout. There's your double doji. If you're long, you stay long. I'd have a safety stop at today's low. Oops, didn't scroll fast enough. Coop, I think, had kind of a bad chart today. Yes. What should it have done on this J-hook pattern? Broken out. The fact that they closed it below the T-line. You've got dark cloud, sell signal. Came up, couldn't get to a new high, sold off. Is that a good bullish chart? No, you close it out. Hartford, not wildly exciting, except for the fact that you can add a few pieces of evidence to the fact that you're above the T-line, you had a buy signal, you can stay long as it stays above the T-line. Mohawk Industries. Kicker signal. Whenever you see that kicker signal, expect more pressure to the downside. If you're short, yep, Salam, stay short. Work, you can get ready to short this one. Left-right combo, bearish engulfing. Who's winning the battle? Pretty much the bears. You can short this one, anticipating more downside. CVM we did. You can see all the indecision here at the 50. And then the bullish confirmation. First target should be up here. And then if it breaks out, you could have that type of move. CTL, that's a good looking chart. You can see the trend. You can see where they supported. Obviously a bullish Harami right at the 50. Now you have a doji sandwich, so you got pretty much a McMuffin. Where's your next likely target? The top of the trend. Oops, I didn't see. Sting. Stay short. Ever since you closed below the T line, what's the one obvious thing that's happened? They've never been able to close back up above the T line. Does that have to do with fighting roosters? Jay, what is that about? The flutter kicker? The signal is your number one criteria. And then further confirmation is the T line. So there's going to be times where you see a trading below the T line, but it might not be a signal. So if you just stay with the basics, if the signal is your number one criteria, especially wherever you are in with stochastics, the other confirmations will become that much more clear. Isn't Bosch a confusing chart? No, not necessarily. You're in the oversold area. You had a bullish Harami, bullish, closed above the T line. It was consolidating right here, but now what's it telling you? Telling you you're probably heading up, but you had kind of a sideways movement in this chart. So I pretty much want to see what happens here or here. Okay. CMN right now, where's your stochastics? Your stochastics are saying, we're coming up out of the oversold area. So where would be a safety stop that tells me things aren't going the way they should? Probably below today's open. Is that the one that's... Are you trading this one long? So if you bought this on the basis that confirmed, should have sold it because now you're back below the T line. Oh, the flutter kicker, all right. Okay. All right. Again, the prospects of this market trend is we're not seeing any real great selling, which might mean we're in the summer doldrums. Might mean they're waiting for the Feds. Might mean they want to see more stuff coming out about the China tariff talks. Doesn't matter. As long as there isn't any drastic selling going on, that's going to allow the patterns that are working to continue to work. This is the reason I emphasize that we've got probably 12 major signals, 6 or 8 patterns. 18 combinations, which we call the top ranked signals and patterns. You want to learn the signals, that's your bread and butter. You want to learn the patterns, that's kind of your combination of the signals. And then the top ranked signals and patterns, like your best friend, left-right combo, belt hold, kicker. You don't need to know or learn 18 inside and out. But if you learn 4, I can still guarantee you're going to have more trades than you can possibly handle. And the more you become an expert at 4 trades, now you're not at the whim or the mercy of, you hear rumors, you have somebody say it's a bad place to be. You don't have to listen to anybody else. You can analyze what's actually happening in the chart. Okay. Still making some good money in this market. So with that, everybody have a good evening. We'll see you bright and early in the morning tomorrow. We'll see you then.